Good evening, good evening. Welcome to the live Facebook. This is Martin Wong here, and tonight we are continuing where we left off, which is the market outlook for the second half of 2025, which is the part 2 of it. Now, last week I did a very short part 1 of the outlook as I painted, and the year 2025, especially second half, isn't going to turn well. And tonight I'm going to share with you some of the evidence and research that I have with you, and probably you will see it my way and probably give you a little bit sense of strategy going forward from here. Now, one of the best way to use the strategy is using our SmartRobie. And our company Definitely Trade VSA is our first investment advice license holder, and we did get this, and we are able to give out buy and sell call digitally through our SmartRobie app. Thank you for coming tonight. And of course, our campaign, our one Apple iPad 10.9 inches is ready to be awarded. We have an ongoing runner, and his name is Tom. He actually made a minimum of 4% and right now at 8.22%. So all you got to do to get hold of the free iPad 10.9 is to beat Tom. We got still another 2 more weeks to go, right? This have to be a real trade, all right? And a minimum of 4%, else you are still eligible to put in for what we call a 50 ringgit voucher, a touch and go voucher there, okay? Now, year of snake, which I showed since the beginning of this year, continue to be very bad. As I said before, this is really a revelation to understanding the year of snakes and how the market will impact and perform of it. Now, the question is, how bad is this market going to be? Now, right now, the market is down 9%, which I'm going to share with you in here, but we're going to go down to more detail. Now, let's take a look at the FBM KLCI today, yeah? So the FBM KLCI today, and we're going to go first to here. All right, and we're going to interpose this with the Nasdaq. Okay, Nasdaq. So it's good to look at both concurrently. Definitely, if you look into it, both are really in what we call a stage 4 downtrend. Okay, you can see from here. Let me just bring this up again. Right, from here onwards, the market is at the downtrend. This is the KLCI and this is the Nasdaq. So both charts are showing the market continue to fall off, but both of them are really having the bottom here. You can see here, this is when Donald Trump paused the 90-day tariff, the market going up. So right now, the evidence are very clear. You can see in the Nasdaq market here, you have a double bottom, and that's what we were talking about earlier on one of our live training. As a matter of fact, on the Tuesday, I've said about the market has to form a double bottom that we see here. First leg, second leg. The KLCI isn't that convincing. So what it did is just continue to rally up. You got a couple of up thrusts in here. Definitely today, the market is up 11 points. The KLCI overtake the up thrust. So that is a very good sign. So we are waiting for the 20 and 40-day moving average to cross back up. Should this cross back up, market certainly looking to be more positive. So right now, I do think that at this moment, the KLCI hit is worse, and the same goes for the US market too. So this is the market bottoming. So right now, a lot of the stocks in KLCI will reverse. Now that's very important, but you still need to wait for that green pentagon. So for our listener in here, for our members, those of you listening, please watch the green pentagon because that's the one's going to be returning upward here. The complete reversal for the US market is already done. All right. Now take note. If you look back from the peak to the high, this was almost how many percent? 20%. all right, so usually in 20% you'll see the market rifle down, and you can see from here the intraday it's about 10%, 20% for the Nasdaq, 10% for the KLCI, and that's market going up. But the cautionary note is that many of you may not buy yet. Okay, I don't blame you because you're not able to see the market, so I want to be able to explain to you. You also got NS here, which is a very good thing. So we just wait for 1 or 2 more days and then the green pentagon will come up. But the question is, how much would the market react immediately? Once the market turn green pentagon, would it continue to go up? Because this will really depend on President Trump, which is classic yes, no, on tariff, no, off tariff kind of thing that we have seen, right? Just a couple of days ago, they said no negotiation, and then all of a sudden, yes, the China, they'll be very nice to China. The tariff with China is not going to be hard. So a lot of the tariff market sell-off are actually caused by him, but he is the one also recommending the solution. So it's a bit irony, but that's how he as a president in here, and that has caused major disruption in a lot of the logistics as well, planning going ahead, what should be done in here. So there's a better way to manage the relationship between country to country, being diplomatic of it. We will see how Donald Trump continue to use his media and his power to sort of impact the market that we see right now. Okay, so right now, in short, the US market has already panned out. We have a double bottom, and then the KLCI market has reached the bottom in here and really started to move back up again. All right. So we're done. Okay, let's take a look at the Dow Jones now right now. So Dow Jones, we do a YM1 here, right? And very similar to also below the 200-day moving average. Okay, you can see from here, right in here. Now Dow, how much Dow has fallen? If we take it from here, the intraday, that is almost 15%, okay, 15% and 20% for Nasdaq. Right now, very similar, you have a double bottom here, all right? A double bottom is a very stable, what we call bottom reversal that will reverse to the upside, and that's where we are seeing with the Dow Jones in here. I think it's ripe enough for the US market in here. You have the overhead resistance at 42,000, right? It may touch that, and we will look for possible profit taking at the 42,000 in here. Now, like it or not, a lot of the rally will temporarily be very, very short. Okay, continue to take profit if you need to. The long gains are elusive. Don't expect to get long gains, those kind of things that you've seen in 2024. That's not going to come in because Donald Trump may just open up and give another what we call a comment about tariff, and then the market will sell off. Now, for those of you who just joined us, do you agree with what we just said? Give me a thumbs up in here. I'll appreciate that. If I also let me know where you're listening from, and I'm happy to answer any question of any stocks that you have. But as usual, every Wednesday, many of the members are pretty shy. So if you want me to review any stock, please go ahead. Now, I also want to touch on VIX, okay, VIX. So on VIX is a fear indication in here. I was expecting a double top, right? As you can see here. Now, it's very important. Let me draw a conclusion. As soon as the last news of Trump talking about firing Jerome Powell, the market actually reacted. Then the next day, a couple of CEO like Walmart came in and said that, hey, the tariff ongoing and you shouldn't go head on about talking about firing of Jerome Powell. That has been very negative in the market. So you could see the market actually sell off right at this date here, which is 21st of August, which is April Monday, right after Easter. So, and you notice on the left hand side, the volatility index gone up to 34, which is usually the 30 mark. If you look back at the past, these were the highest points. So now market drop back up, right? This is the tariff war. So it's quite unusual. So expect that. And this was the previous sell-off that we have. I think there was a global sell-off. I think that was back in 2024. But the market came back down, and very similar, the market will recover. The question is, will it go back to the old high? The answer is likely not for the year 2025. All right, likely not for 2025. So right now you can see there's a lot of room for the market to move back down, right, to 23 or 24, from 27 to 23 or 24. So that means the fear index is coming down. As the fear index comes down, we will see Nasdaq, okay, and a lot of the Dow Jones index will start to move up. That will give the overall indication of the market going in. If you agreed with me, please go ahead, give me a thumbs up. All right. Now, where do we go from here? Okay, so if you look at the KLCI market, let me just bring your attention here. So if you're a member of our VSA 360, you probably know what is this all about. This is our weekly seasonal rating in here. So very consistently, you can see March since 2019 has been negative return. So April will be a positive month. Now you can see that, right? But as I said before, time and time, the KLCI, interestingly, have a very seasonal return. For every negative month in January, okay, if you look back 2024 and the 4 months, every time it is negative, you will get a negative return. The question we always want to talk about is how bad is the return? So right now it's minus 8.74%. So yearly has been 2%, 3%, 3%, 6%, 5%, and 0.4. I will say we will likely get a negative return, maybe around 3 to 4%, still around this range. So that means the market will pull back. They will probably have some recovery month in June or July. That is the highest month. But don't go in only buy in June or July. Now it's important that you all know which month is bullish or bearish. Time it together with the Pentagon Guider, then you have a better entry. So this is always I've been saying to our members. You know the month, you know the Pentagon Guider, you want to get in. You don't wait until everybody get in and then you buy. Guess what? The market turn against you and then you are stuck with those shares. This year is not a year to be buy and hold, to look for those big gains. It's definitely going to be a year of short profit taking, see money, take money, constantly turn over, and that's how you want to be end up profitable. If you can see from our bot that we've been trading, it is still a positive month going in there, but we are looking for better returns from the bot. They do have losing month from our trading bot with the SmartRobie in here. All right, so that is the return. All right, any comments if you all have anything you want to ask me, feel free to do that. Now I want to share with you, it's something that which I've done for the part 2 of tonight's presentation, is the GDP growth with the Bursa. Now you can see from here is the gray color. Okay, this is the gray color here. Let me just switch this to a laser pointer. Okay, this gray color is the KLCI. Definitely you will notice our KLCI has been, the last 10 years has been stagnant between 1,004 to 1,800. So that's market stagnation. All right, that's one thing for sure. So I believe one of the reasons why is because they really feel big tech company that have large capitalization or global brand or really growth company. Many of our tech company like Inari, these are what we call tech company secondary support. Even with the some of the D&O, they are all making optoelectronics, they're making the OSAT, so forth. So these are just primary in the what we call the supply chain, part of logistic or semi finished good that goes shipped into US, reassemble back them to become the finished product. All right, so that's why we don't see the kind of material. No doubt it has in tune carry on like what we did in year 2024. The market did recover back. So here is the key point. We talk about the GDP growth. Now if you do notice, from 2016, this is a 10-year mark, okay, over a period of 10 years, you'll see the 4.6%. So generally our GDP growth has been 4 to 6%. Bank Negara estimate for 2025 is still around 4.5 to 5.5, still within that mark. So right now is 4.4 only, okay. So 4.4 is on the low side, okay. Last year we were at 5.1. Okay, so remember it's always 4 to 6%. The higher the better. So that simply means the only time that we go above the 6% was a COVID, right? After the 2019 COVID, then we have a second COVID, right? Remember? Then the market actually goes higher. But you notice the market go higher. The KLCI, which is the gray color, didn't go higher. Alright, so that tells you there is already a stagflation in here in terms of the KLCI index. So that's why people talk about 1008, 1007, which is the high range here. What do you think? Unless our GDP growth really grow a lot, I don't see it going up. So that's why my take for this year is still going to be a negative year, judging from that. So right now the KLCI is at the bottom already, around the 1,500, and I say it's a good time to be buying because this market pullback creates opportunity for you. So make sure you know, like you already know the month for our members. Go and check out the month, which month is a good month to be buying. You can see the negative month. Look for that green pentagon and then swing the as the market go higher, get that maybe 10, 12, 7% return from each stock. And that's a strategy going forward in here. All right. Beyond the 1800, we will have market hardly to go up. I will talk about the low foreign funds coming through. Now, drawdown matters. This is my conclusion, right? The hidden signal behind the KLCI year end. We always have to look at the intra-year drawdown. Now, intra-year drawdown, which actually look at what I've just drawn on the chart from the peak right to the bottom. Okay. Then we have the intra-year high from the bottom, go right to the peak. And of course, the peak has to be a new high, a new high, not the previous high. Probably like haven't seen for the last 6 months to a year. So this forms some sort of like a Bollinger Band. You can see, right? The green color represent the green and the red color represent the stretch. So just like a rubber band, right? You pull, the top part is the intra peak, all right? You pull below, the bottom part here is the intraday drawdown, all right? And then the blue one is the end of year return. So remember, over the last 10 years, we only have 2 years. 2017, 9% return, 2020, 3.8% return, and 2024 was 12.5%. Right now, we are at 8.9% return. Now, you also notice one thing. Whenever a year with negative more than 10% drawdown, like 2025, 2022, and 2027, you will end up to be a negative return. That's why I already concluded this year will be a negative, maybe -3 or -4. But the exception for year 2020, you had the swing up because that was a COVID year. The market swing down, snap back up very quickly, and of course there was a rally. Many of you still remember, right? Well, we were in lockdown, COVID, everybody turned to trading and it became very popular. We know all the rubber glove stock fly almost to the moon and then came down crashing. Then 2024, we saw all the data centers went straight up and now came down also crashing. This is how the market is. Right? You all have to accept it. We cannot let a stock run and run again. At a certain point in time, you need to take profit. So remember, right now, okay, the first half of the year, we have a pullback, which I've said before. This quarter, we have a pullback that allows us for the second half of the year, you know which month will be positive, you know where you can take profit too. All right. So with the negative, what we call intra-year drawdown, you will definitely get a negative return. So my take this year will be a negative, which also coincide the earlier slide which I share with you, the year of snake. Okay, the year of snake is going to be a negative year. I'm very sorry I couldn't give you a very positive outlook where the market will be a positive return like what we saw. It's not going to get there. All right, we cannot get away without talking about the US dollar to ringgit. Now, like it or not, our US dollar to ringgit, as I said before, correlates very well to the Chinese yuan. All right, this is a forex correlation, and this chart you see here goes back to January 23. The red line here is the US dollar to China, and the full candlestick bar here is the US dollar to ringgit. So right now it's around 3.38. People would say that you should go down below 4. Now this, all like it or not, actually correlates to the Chinese yuan with the US market in here. All right, so usually means if the Chinese yuan get weaker, ringgit will get bigger. And one of the reasons why is because of the largest, China being the largest trading partner, which I've talked time and time again. So there's something here. But right now, our ringgit definitely is getting stronger, partly because of the continued reciprocal Trump reciprocal tariff that's ongoing in here. But guess what? Once all those tariffs have been settled down, eventually they're settled to a very low number, not the number you've seen, 24 or 25%, maybe 10 or 15%. In return, each of those countries like Malaysia will buy more of US product. So there isn't much US product, to be frank here, unless soybean or a Boeing. Okay, so you're either going to buy more aircraft or you're going to buy more soybean from them. Other than that, it's all pure services. And remember, services are not part of the tariff negotiation in here. So right now you can see the 200-day and the 50. This is the 200-day moving average, and the 50-day moving average is below. So it means in the shorter term, at least I really don't know what Trump's going to be stating the next 1 week or so, right? The ringgit should get stronger. But keep in mind, right, the major support here is 4.3. That's the best we could do. But if we should break the 4.3, strengthening will go up to 4.1. All right, now foreign fund returning, Malaysia back in focus. Now this is as of 17 April. For members, please check out the foreign fund flows on the VSA 360 in here, and of course the data is sourced from the Bursa Malaysia website. So you can also see there was another occasion, I think on Monday, we have 2 positive foreign fund flows. So that is perhaps a pivoting point for the foreign funds started to come back, and the market, as I said before, won't drop that much. That's why it's my job here to explain to you every Wednesday, to our members, to the public, that this is how you want to find the market bottom using the Pentagon Guider plus some macroeconomics that will help you too. The foreign fund flow correlates almost very positively to the inflow, meaning if foreign funds outflow, market fall. Foreign fund inflow, market go up. That's how it works, okay? Right? And then of course, the peak of the outflow of each foreign fund usually follows the low of the FBM KLCI index. So you can see here, there was a peak here. It did hit here, maybe a bit here. Not so much on this one. There was a big sell-off, but this big sell-off was what triggered the continued breaking down, right? The KLCI is the blue one, and that was around the 1550, and we are struggling. I think we just broke off to maybe the 1500 here, or 1495 maybe tomorrow, and you hear this news on Friday, it'll broke back up, and then you will see foreign funds is coming back in here. Does that mean there's a renewed confidence in the Bursa Malaysia, or is this because of some reciprocal tariff that is on and then off, and then renegotiations of foreign funds started coming back in here? We will know very soon. But of course, keep in mind, MIDA Research note that there are still strong pipelines. A lot of the economists and analysts are still positive on the projects. Now remember, last Wednesday I covered about some of the major projects in second quarter 2025, so make sure you check out those. So I won't be covering it tonight. All right, and green energy. All right, now if you have any chart, feel free to pencil those in there. It's my job to help you to analyze them for you in here. As usual, I don't get that many in here, so usually that's how our session will end. So congratulations to Tom being winner coming up soon on the 7th of May, the closing date. So if you can beat Tom with the 8.22%, go ahead. All right. So the big understanding of the market stages, as I said before, is where we are now. Right now, the KLCI is looking into likely come to the end of stage 4. We quickly have a rebound here, but it hasn't gone through what we call a stage 1 yet. It needs to go through a stage 1 before market can climb. So when the market goes off, it could be one of these, rebound back, and then we still need to go through this. So it has a double bottom. We are somewhere around here. Okay, the beginning of a stage 1 or ending stage 4. So we need a market to form a double bottom, then it perhaps will go up. That's the criteria we are seeing. And guess what? We do see that for the US market. Okay, we see that for the US market, but for KLCI market, not. So for our members, if you have any stocks that you want me to check it out, Pentagon Guider, anything, let me know. Put it in the comment in there. I'm happy to check it out for you, and also give me a thumbs up as we are doing this part 2 of our stock review. Okay, So I won't be doing any stock pick or whatever the case is. You can go and check it out from SmartRobie. I usually cover it on the Monday session for the SmartRobie, either the Malaysia or the US. Those are the same stocks I'll be looking at in here, and they are very positive. More importantly, this session works out to be the overall macroeconomics to give you the confidence in what of the forms I've shared with you. If there's no stocks that you want me to analyze, I will stop here tonight. We want to make it very snappy for you on that. Don't forget to join our campaign also and win the 50 ringgit touch and go voucher plus the iPad 10.9 inches, which will end this month. All right. So minimum of 4%, you need that. Our VSA 360 premium membership continues on. You can also join it, and don't forget to join our Telegram chat room for our stock market and subscribe to our YouTube channel on here. All right, last take. Any stocks that you want me to analyze, right? Or you're completely out on the market? I wish you all the best. Do get into the market. And right now, I presented the facts that the market has already bottomed. Thank you for coming. I'll see you next week then.